right. That's going. Let me stream my shit in here. Back. Let's stream it in queue. Stream that. Right. Market structure and importance of time frames. Girls and boys are getting down on the farm. Okay. Let's do the countdown. 5, 4, 3, 2, 1. Happy New Year. Again, welcome in, everybody. Welcome to another awesome, phenomenal stream where we will cover what we did on the day today, and we will also do a little lesson on market structure shifts and the importance of higher time frames. Today, I'm joined by none other than Mr. Hazed Beats himself.
Yo.
Yeah, we'll just be commenting on the markets and seeing what we did. Just kind of going over. If you guys at any point, if you guys have a question, please ask away in the chat box, in the comments, or whatever you feel like doing. Show us some love if you enjoyed these by liking and doing a little repost. Always appreciate it. But without further ado, let's dive into our... I think today we'll kind of build into... we're always just building on the lessons that we have previously covered. So on Tuesday, last night we didn't stream, had some work obligations, but on Tuesday we covered OTE, right? So let's look at our OTE over here. Last night, or on Wednesday, we had a nice FOMC pump up, but we did not take it seriously. We did not want to see that pump. That was not something that we wanted to see. It still held all of the levels that we have outlined to the upside, and on the daily you could see that FEG. But Shane and I both took a little short overnight. For me, this was the logic. We have this giant candle, all right? That's that giant retracement we had. You could probably outline it on the 30-minute, right, on the 15-minute. This is that giant retracement. That's that range that we were looking at. So for me, I was like, okay, we could probably retrace into here, into this wick somewhere as well. Probably looking into the 50% of this wick, just because we always want to measure that out and look at where we rejected. We did not clear above the 50% of the wick. This is on the 4 hour as well, right? On the 4 hour, the wick was even bigger. You could even just take the manipulation of the wick, probably give you even clearer levels. But we took this little manipulation, right? Outlined the 50% of it. What did price do? Price came into it, into this OTE, and then we sold right back down. And then we sold right back down into the OTE of the range that we had. So from that previous day high, let me line that up. Previous day high to our Tuesday low. So Tuesday low to Wednesday high. That's the low range that we had, right? Most recent low to high. And guess where we bounced today? Right at the 0705. So we took the shorts from here to here, over here. We got some longs going right to Asian session highs because London took the bottom, very hard bottom. We took that bottom and then price retraced back up into here. Then over here on our in our Discord, we were looking for shorts somewhere around this area, and we were saying, okay, if we get above this London open, or not London open, sorry, that midnight open, then we can see a continuation up, take those liquidities there higher. If not, we'll likely come back down. On the 15-minute, we have swept that liquidity, right? It's something that we've talked about, order blocks. That was one of our previous lessons as well. OTE order blocks, right? So we have those two covered. What do we have on the day here? Thursday, look at that outline. So we said, okay, this candle we drew out. I said, all right, we need this to close below. We swept the liquidity over here. This is the last up close candle before market started to reverse. We closed below the open of that candle, formed a little order block. Price retraced into it, tapped it a few times over here. You can see we came into this fair value gap. That's what I was initially looking for. Came into it, right back up into that order block, and then sell from there. And then we also said, okay, just look out for the OTE of the range, just because we can see some reactions there. 705, right in this fair value gap on the 15-minute. We came up, tapped it, bounced a little bit, retraced a little bit more, continued down. But so far we held above that 786 of this whole range. So right now we could just be looking at the daily range itself. Right, those were the setups on the day. That's just kind of those basic ones that we played off of. Let me put this one in here as well. Okay. So right now we got quite a bit of like nice liquidities to the downside. So we could be looking for more downside tomorrow. If we want to just sweep all of these and come back down over here as well, we got a lot of potential for those lows. They're looking quite saucy, and that's with the gap up chart, or with the contract roll price. Or we'll look at the hourly actual continuation chart. But over here right now, Asian session's kind of consolidating. We'll see what London does. Could come up, take this, take top, take bottom, and then tomorrow we see a little S&D seek and destroy, where we're taking both sides. It's kind of doing the thing. Over here, right on the 5-minute, could have taken this range right here. You tap your OTE, hold above the 786. Right, tap that 786 right into that. Continuation up. Sure, if we slap an expansion on it as well, you will see how well those levels lined up. We need this picture piece to the equal 1.618. All right, 2.125 didn't quite hit that, but we still had a solid little bump up into those levels, into those market opens. And that's why we stress the importance of those higher time frame levels. So your daily opens, your daily closes, and any close, any open for that matter. Right, we always want to look for that. That was the play. That was the play of the day. Beautiful. Right now we're just in a little paper short. We're looking for some bottoms, so we'll see. We'll see what they do. Over here, I could probably switch over now to the other contract, but I'll do that at the end of the week. So we'll hide this. That's for review on Friday, or Saturday. Grab a drinky poo of water. So you can see how we still have a lot of downside liquidity, how that trend line's following right there. And let's not say we're discounting the things that we have at the top, right? Right now, we're looking at, we have this OTE that lines up with this fair value gap. We have a little volume imbalance. That could be just due to the contract. Let me look at NQH. The most recent one, no, June, NQM. It's our most recent one. Okay, yeah, so that's just due to contract. But still, right, we can draw the same thing where we have this little line right there. We said Sunday open, we want to see how we hold this level. If we're going below it, then we'll likely sell. If we stay above it, we'll likely pump. Right now, we're still having trouble, a little bit of trouble at that weekly, at this previous weekly close. So if tomorrow we displace below this 19,871 on MN or on NQM, we can sell back down, right? And what did we outline as well at the beginning of the week? We said 50% of this wick is very important. If we tap into it, we were likely going to push up. What did we do? We came into it, right into that wick on Tuesday. Monday had a pump. Tuesday we came into it, and then we bounced up, right? And you can see how well these levels are holding, right? This is what we keep talking about. There's your close over here. This next day, the close did not hold above it, so we sold down right into this level. Then what do we do on Wednesday? We came up, held this level open, and then we continued up. So right now, we're just kind of holding below the close of this candle. As long as we keep holding below that, we can see continued downside. On the daily, we're almost like triangling out. Got a little, but we're still consolidating, right? We're still consolidating on the daily time frame. This is still a bigger picture consolidation, right? So we're not reversing yet, as we haven't quite yet swept all of the liquidity. So you can see how, since this is just a single contract chart, single month chart. But if we go to our US 100, right, we can see similar thing. Now you can see a lot more lows to that right side, right? And this is what we were kind of looking for. Maybe possibly still come back down, right? All of this consolidation, all of this just chopping around. Look at this trend line that we're building up right now. So if we break this, we could see a lot of good downside. Like that, you see that? And then we're almost like built in a little triangle guy right here. Getting this line. Right, almost doing this little number on it. Toss it up here somewhere. Yeah, there you go. Building out this little consolidation. So possible, right? We can tap into the 50% of this 4-hour wick. So let's outline that. I like that US 100 chart. Let's do this. Let's do see. That's our consequent encroachment right there, right? Probably tap into here somewhere. Maybe go below this trend line. Then back, retest this trend line. Continue down, right? As we do still have some lows on our higher time frame that we need to tap. I'd love to see this low eventually. I think this consolidation, this huge compression, right? What we keep talking about, you compress a spring long enough, the harder you compress it, the harder it's going to expand. That's what we're building out right here, right now. The harder you compress it, more likely we're going to expand down. Huge low, just, I don't know what we have on news that might drive us down that far. Flash PMI next week, final GDP, that could be a good one, and core PCE. Those prices could be, or those news could be crucial to that longer term time frame, right? In terms of selling it down. Is that what we're looking for? Because we do not reverse from consolidations. We keep stressing that. Do not reverse from consolidations, even like weekly, right? Weekly could close right here, right? Just hammer it out. Or so far, as we have not seen any potential or any big move up above any of this area, any above the body, I would say it's pretty likely we might come down, retest the low of previous week, but do not quote me on that. I'm just a guy.
Hold you to it.
Yeah, don't hold me to it. But right here, and look at where this would be on the hourly, almost this fair value gap too, right? That we keep tapping into. We tapped it. So right now we're just kind of building our if-thens, right? So the likely case, if we go back to our NQ chart, NQM, right, what we kept talking about, this lines up just the wick of it. So anything below 19,872.50, we can see good downside below this level. If we break it and hold below it, we can see good downside. And look at this level that we outlined. Look how well we keep holding that, right? So we had multiple retests off that level, and it keeps on holding. So let's see how they want to play this out tomorrow. I mean, we're still in a range, right? You have your external liquidity right here. You have your external liquidity right here. So what are we doing right now? We're just kind of eating away at the internal liquidity. All of this internal liquidity has filled. This is the last internal liquidity that we have on our hourly chart right there. So once we take that, it's a matter of, those are going to be huge swing points, right? We have these highs, we have these lows, so they can come down, take all of these external, come back up through internals, external, right? That's what I'm saying. Possible, very possible S&D day tomorrow. Seek and destroy. Price going from top to bottom, bottom to top. Similar thing that we did today, but not necessarily like your ideal pre-market setup for an S&D. And just let's get back to our NQH. I'll keep that.
If you peep the QQQ daily chart too, we've rejected out of this bearish imbalance 3 times now.
QQQ.
So it kind of lines up.
Yep. And that's what we keep talking about on the daily as well, on our daily right here, right? We got this daily fair value gap. We keep on holding below it. That green line is very important. As long as we keep holding below it, you could see potential downside. Or, yeah, if we hold below it, we can see very likely downside. If we were kind of chopping around it, this is your range right here between, this is NQH chart, guys. Give me that green line. Why is it so hard to select the line on here? 19,686.75 up to 19,861. Those are the ranges that we keep bouncing between. All of those levels rejecting continuously. So we'll see what they want to do with it. We're going into it unbiased, right? We're playing if-then cases. If they want to hold this, then that. If they don't want to hold this, then the other, then the opposite. If you guys are just now tuning in, make sure to give it a little like, give it a little share. We appreciate you guys' support. As always, check out papertraders.io. We outline our plans every day in the morning. Shane provides great live market analysis. He fucking draws magic lines on the chart, and it fucking goes right to that target. So I suggest you guys hop in there and see for yourself. We got Big Timmy Hedge in there. Follow him on Twitter. Phenomenal guy. He reads the most interesting stuff about the market, and it works so well. He's got a lot of experience in the markets. And yeah, we just got a lot of value in here. Come learn with us. Come chill. Come hang out. We got our daily live streams that we're doing here on X, but inside Paper Traders, we are doing a lot more.
Yep. So many good traders in here. So many different styles and so much growth.
And not to mention Mr. fucking Principal in this house too. I'll stream this guy is your Globex master. His curriculum.
115 cult.
115 cult, amen. The secret of the 115 cult. Alrighty. So now that we have kind of reviewed of what we did on, not kind of reviewed, now that we have reviewed of what we did on the daily, let's possibly go to our 15, see what levels we can have for tomorrow, right? What are all of these liquidities that we keep seeing, right? We want to outline those. I marked them out with a pink little line. Make it aesthetic. And if you guys have any questions at any point, please just comment below. And we will answer them. Or not comment, or put them in chat, put them in the comments if it's after the live stream. We'll try to get to them. Got our previous day high outlined, right? That's important right there. We have our previous day low, which is, what's our previous day low? That's this level right there. And I mean, we have this little liquidity right there as well. So let's see how they want to play this tomorrow. If I had 2 dozen roses. If you guys can't hear the music, you're missing out too. But I think you can. We also do free karaoke nights in here too, from time to time. Timmy and Shane hate my singing, but that's all right. Nothing we haven't dealt with before. All right, let's get into our lesson today. Since yesterday we kind of didn't do a stream, we were supposed to cover importance of time frames or market structure shifts, but today we're just going to do a combination of both of those because they also relate very closely to each other. They kind of go hand in hand. So importance of time frames and market structure. You saw the 3 different time frames that we use, and we also covered it in our early live stream. It was ICT basics. That was the very first stream of this series that we have done. So I say check it out. Go to YouTube, check out our page, check out our channel. You can find all of the previously recorded videos under the live session or under the live section on YouTube. Everything is in there starting on starting March 8th. And from there on, we've streamed every day or almost every day. We skipped probably 2 days so far just due to, life shit. But that's why we left 1 day blank just so that we can fill those gaps if need be. So check those out. Learn from them. Let us know what you found valuable in there. And then we'll just keep on doing this. So, your market structure shift, right? We kind of talked about displacement, and we keep mentioning it in our daily trade plans of like, okay, if we displace this level, then we can see this. If we don't, then not, right? Displacement is defined by a large move, all right? Let me pull this up real fast. Hard to get in. I sleep at night. Yeah. Identify trend exhaustion. Yeah, so you always, right, in the basic video, we covered the importance of the 15, the 5, and the hourly that we have, and sometimes how I switch it between the 4-hour and the 60-minute or the hourly time frame. Kind of looking at those, right? Your higher time frame is going to tell you everything that you need to know what is going on in the market, right? I can be looking at the 5-minute thinking we are reversing trend like we could have been doing today, right? Or any other day. I could look at this and be like, holy shit, yeah, market is fucking selling right here because we have a market structure shift right there. Oh my God, right? But then if I zoom in on the hourly, then it might just be a simple retracement, right? So that's why we are always looking at those higher time frames, just identifying our areas of execution and points of interest. Lower time frames should mostly be used at the higher time frame areas of interest. So if you have a higher time frame level or like a very high time frame liquidity, you can drop down to your smaller time frame and see those market structure shifts happen a lot better. So you can use, I'm not saying you should, but you could use like a 15-minute liquidity with a 1-minute chart, right? That can give you the small little movements. But honestly, if you're just starting out, focus on your higher time frame levels and your higher time frame charts. Learn them, analyze them, do everything you can to just kind of get your head in the game with those higher time frames, and then it'll be much easier because all the concepts still apply. From higher time frame, it's easier to identify them, and then once you identify them on that higher time frame, you can drop down to a lower time frame, apply the same concepts. So, a market structure shift is mostly defined by a big displacement, right? That's what we want to see. We want to see a big break, right? As ICT mentions, you want to see an elephant stepping into a kiddie pool, right? And from what we know, we never see a reversal from a consolidation, right? We see consolidation. We keep going back to the same IPDA, interbank price delivery algorithm. We've mentioned this a lot of times on our live streams. So IPDA, right? You go from consolidation to expansion. So expansion in the direction of the trend that you have been going into. Retracement, which would be just like into OTE that we've talked about. And then from there, so like right here, right, we can see a little consolidation over here, expansion to the downside. We can see a reversal from there. So from expansion to reversal. and then a continuation of our expansion back into consolidation. So consolidation over here, back into expansion to the downside, and then over here is that reversal, right? So we see that after that reversal happens, you want to see a displacement through a high and a formation probably of a fair value gap, right? That's what you typically see with displacement, a large move, and you can use that, right? So right here, that is our market structure shift right there. That is where we change from buying side of the curve or from sell side of the curve to the buy side of the curve. Shane is very good at identifying those curves and drawing them out. So it's very interesting to see, right? So at the, where's the little fucking curvature tool? Trend angle. Where's that tool? There we go. Curve, right? So you have your sell side of the curve, and then in reversal, you have your buy side of the curve right there, right? And at the top, it's the opposite, right? At tops, you'll likely see now your buy side of the curve is flattening out. You got how the hell buy side of the curve, right? And then sell side of the curve. Terrible at drawing these. I don't know how to use drawing tools. What can I do? Sorry. You have your buy side, sell side, buy side. Right. And we're always looking at those, just kind of seeing, okay, how are we routing out what's happening, right? That's how we identify the markets. And the market moves in those accumulation, expansion, accumulation, expansion, accumulation, expansion. Those little areas. I forgot what that's called. I have a picture of it though. Let me pull up my little ICT folder. Yeah, it's the market maker buy model and sell model. This is what we typically see. Strat. I don't know if you can see my telefono. Pull up. You can see on there. Barely. There you go. Now you can see it. But right, so it kind of moves in those stages, like down, 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 up, down, 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 up, and that's when we see those market structure shifts, right? So we want to see a displacement through this level. Right here, we displace this previous high that we have put in. So as long as we hold above that, then we can see a continuation up, and then you can start applying all the concepts that we have previously learned as well, right? Over here, okay, bottom of this, the close of this bearish candle is holding for this bullish candle. Now we have closed above the open of it. So, okay, cool. There's your little order block as well. So now we continue up. Your market structure shifts are going to look very different on your higher time frame versus lower time frame, right? Especially at those areas of importance, right? Especially at those key levels. So once it's swept, you can see a market structure shift way earlier on the lower time frame rather than like a higher time frame. But a higher time frame is going to indicate more of a sell pressure or a buy pressure, right? It's going to indicate more change, right? Because you have more volume in that single candle or more data in that single candle than you do on like a singular 5-minute candle, for example, right? 3 5-minute candles form your 15-minute candle. Over here, same thing that we talked about, right? Consolidation, expansion, retracement, expansion, and now right here we got your little market structure shift, right? So it's still just a confirmation rather than like, okay, we're reversing right here, because you see this level, right? We swept this, didn't quite displace it, but retraced a little bit after consolidation. We saw a little retracement into this fair value gap. And why is it a fair value gap? So I'm sure it is right above that 50%. Look at that, right? That's in discount. So we tap into that, then we continue down. Then over here, we're just kind of consolidating, continue up. Like we prefer to use higher time frame levels just because it's way easier to see those tops and bottoms. Over here, right, you can see how that curve is flattening out on this side and then starting to gain momentum on that side right here, right? You got your buy side going into sell side slowly, right? You can put an OTE over here on this. Right there, you got your OTE. We retrace into the OTE. We kind of haven't closed down below this level. So, okay, so what is our next high, low? So as long as once we displace below this low, you can see it's the bottom of that range. Cool, there's your market structure shift. You got your huge displacement candle going through it. This retraces into it, and then we continue selling, and then we're targeting all of these lows, right? And look how big that sell was. So it's just looking, I'm sure on a higher time frame, we took some liquidity over here, and that's why we had such a great reversal from it. Let's just always look on your higher time frame. So let's go into our 15-minute and look at some examples there. Like, let's zoom in, probably over here. Yeah. So you can see, right, all of this just like chopping. We kind of displace over here. We're still testing. We got these lows. So, okay, cool. We swept this over here. There's your first initial market structure shift. Right, ICT also talks about like the first, what is that, like first, second stages of deliveries? I think you know a little bit more than me on that, Mr. Shane.
On what?
Like, distribution legs. That's what I'm talking about. Like a first leg of distribution and a second leg of distribution. So there's your first leg of distribution, right? We break below this. There's your initial market structure shift. We can fib this range and we retrace it right into the 786 of it with a fair value gap, right? Once again, why is it a fair value gap? Because we are above the 50% of that range, meaning we are in discount. This is where we want to be going short. This is where we want to be selling that inventory, right? That example that we keep on talking about. So there you go, right? We retrace into it. There's our second leg of distribution. Close below this low. Huge displacement, right? You got an elephant stepping into a little kiddie pool, displacing all of that water out of it. And that's what we like to see. Similar thing over here. All right. You could go on a lower time frame, probably got a market structure shift way earlier over here. And then on the 15-minute, you got your confirmation, right? Like a for sure market structure shift where we pump above this low. We have huge displacement. Okay, cool. Continuation up. And then we have all of these highs that we can target up above. Over here, similar thing, right? You got your little consolidation, another leg above it, first leg of distribution. Then we come down over here, market structure shift right there. We come back, retest it multiple times inside the fair value. That's also hitting those 786s right there. If we take this range, yep, 786s, hitting that inside this fair value gap, and then we continue down, right? So it's kind of all the concepts always build onto each other, right? It's like playing Legos, but you get one piece at a time, right? One piece at a time, and then slowly you just build this awesome little castle or race car or whatever, right? But you're slowly gaining those little pieces and you're slowly putting it together, and then boom, at the end of it, you just have this huge, beautiful puzzle, right? We can talk about the puzzle analogy too. Just getting those puzzle pieces together, and then finally, okay, cool. You have it all down. Not all of it down, but like you have the like a general picture, right? You kind of know what you're striving for. You slowly learning, building onto each new concept, and it's kind of using them together almost, but also separately, right? That's why you want to form a model out of everything that you have. You want to form a model. So I guess Lego pieces are going to work a little better together. You can get all of these Lego pieces, right? And you can make so many different things with them. You can make a car, you can make a little airplane, right? It just depends on what you're looking for and what works for you. So learn those concepts. Don't apply all of them at once, right? If you just put it in a pile, then it looks like shit. You don't have anything. But once you start kind of putting all of those pieces together, okay, you know, Johnny over there got a little Lego car. Shane over there got a little Lego airplane. You know, so it's all different is it different strokes for different folks kind of thing. So just kind of build on that, learn from that. That's going to be my little spiel for today. We keep on selling in the Asian session. New York is about to open, so make sure you watch for that New York level of where we're opening. You can see how well those levels play out. Today we could not displace above it, so we continued selling. So always form your little if-then bias. If you guys are not in Discord, we give out that if-then bias every day, or at least try to, at least in my channel. I'm always just trying to outline it, make sure that it is very well understood. Shane is very good at putting it into picture in terms of, hey, this is my key level. He's very similar structured with that. Hey, this is my key level. If we want to see continuation up, want to see above this level and a strong hold or a strong close above this level, right? Same thing, just different type of explanation for it. So if you guys are not in Discord yet, papertraders.io is going to be your website to check that out. You'll get a little discount right now. If you look at the website, it's got a little top banner. You get a small little discount there. You guys, damn, that's crazy. Holy shit. Thanks, fans. Yeah, that's wild. He was just showing me, just replied, showed me 57 people in the room. So it's kind of crazy, but we do appreciate you guys for joining in, for being here, listening to what we have to say. We want to spread as much knowledge as we can. We want to share our experiences with you. But as always, our experience cannot match with your own experience. So always make sure you're trying and doing your thing, your own thing. You know, you won't know what soup tastes like till you cook it yourself, honestly. Yeah, that's going to be it for me today, folks. Thank you so much. Appreciate y'all. Love y'all. Thank you for all the continuous support. Keep sharing it. Keep liking it. If you guys have a friend, tag them along. Do a Eddie and Hayes stream and chill or something like that together. Watch some ICT. Check out our website. We got our trader log where you can, it's a great tool. You can log your trades. You can upload your CVX files now on there. We got our ICT trainer where you can learn ICT. We got some TT trades fundamentals, and the ICT 2022 model is on there. We got our risk calculator. Just kind of helps you determine, hey, how much am I wanting to put on this trade? And then we got the candle creator that we sporadically use here and there for our lessons, just to help you guys out, to make it more visual rather than just looking at the market of what has previously happened. We kind of build out the case of, hey, this is what is happening, quote unquote, in a live market environment, right? And then there's also all of our social medias on there. So Telegram, we post our plays on there, some crypto plays, some free stuff, some free stock trades on there. Got our Twitter, check that out. Doing fun little giveaways on there. Check out our YouTube. We got shorts, so just little snippets from little golden nuggets from our live streams that you might have missed. We highlight those on there. We also, all of the lives are just recorded and are on there, so check that out if you have not tuned into previous live streams. Everything that we are talking about is just building on to those previous live streams. It's all a structure, right? We build our foundation. Now we're kind of starting to build the house. Check out Rumble, check out Twitch, check out Kick. All of those videos are on there. And TikTok. I think we're still working on the content on there, but it's coming for sure. But other than that, thank you guys. Appreciate you so much for tuning in. All 64 of y'all. Hope you guys have a great night. We'll be back tomorrow morning to do a little pre-market analysis, give you some pre-market levels, drop some nuggets. And then I don't know, because we're doing stuff tomorrow night, right?
Yeah, we're chilling. We're getting off the screen.
Yeah, we're getting off the screens tomorrow. So tomorrow, let's take off. Saturday, we're going to do displacement, Q&A, and recap. So we'll talk about displacement, which we kind of covered today, right? But we'll build onto that concept a little further. We'll talk about that. We'll do a general Q&A. If you guys have any questions at any point, ask them away. Maybe I'll do a little post where you can ask some questions and we'll answer them on that live stream. And then we'll also review what we did throughout this whole week. Just kind of see what the price action did, see the trades that we took. It's almost like a little live journaling session with me and Shane. So make sure you tune into that. On that, that's it for me. Thank you guys. You got anything?
Thank you much. Have a great night. Stay safe tomorrow. I probably will not be trading much because, yeah, Fridays are not my day. But yeah, be safe if you do trade.
You said you
I
won't be fucking trading at
no
all.
no, I'm not. I said if you do trade anyone else, please stay safe and size accordingly. Don't risk
Yeah.
the whole biscuit.
Use the risk calculator, guys. On that, we'll see y'all.
Peace.
Peace.